Welcome to the MSC Monthly Mortgage Minute with Kim and Lisa. Hi, Lisa.
Hi, Kim.
Thanks so much for being here.
Thank you for having me.
Today, we're going to talk about one of the basics when people are thinking about mortgage shopping, how to look for a mortgage loan professional and what to look for in your mortgage. So let's start there because people fall on different ends of the mortgage knowledge spectrum. We'll start with the basics and work from there. What's the first step when people are mortgage shopping? What should they look for in a professional?
In a professional, you want to find somebody local is the best, so that they're easier to access. Of course, you want their license to be within your state, which is, something that's just common knowledge. And you want somebody that you trust. Somebody that you feel like you can speak to comfortably, because we're going to need to know an awful lot about you, a lot of personal information, financial information.
And how do you get past the point people feel like that's just idle prying, when really having that knowledge as a mortgage professional makes you better able to help them, right?
The more information I have, the better job I can do for my customer. If it's information that I review and then determine is not necessary, I can always delete it, remove it. It's not necessarily something that needs to go to an underwriter's eyes. So I can preview that information and screen it before it gets onto the lender.
When people talk about qualifying for a mortgage, it sounds so formal, and I guess in many ways it is, it's an important step. But what is it about that process that you'd like to reassure people about?
We start with the credit application, and that is a standardized form for the industry. Once that's completed, then we have a conversation. We talk about the different types of loans that are available. We talk about the goals of the customer. There's a lot of information that needs to be discussed to make sure that a mortgage professional is going in the right direction and doing what the customer wants. We're going to analyze that for a lot of different features, and underwriter is going to look at specific parts of the application. And so I'm going to preview those first and make sure we've got everything in order before it gets to an underwriter's eyes.
So in many ways, your job is to really help a potential borrower look their best.
Absolutely.
Do you find that difficult in today's climate?
It is a little bit more challenging nowadays. We've got a lot of people who would normally rent, and they're having difficulty finding rentals. And so they're turning to purchasing, and sometimes we need to do a little bit of work in order to prepare them for their purchase.
But you've been able to do that.
I have. I actually just closed one last month that he was a little challenging. He was very patient and he did a lot of work, but we got him to the finish line.
When you look at mortgages on a general level, how, if at all, are they affected when the value of the home they've mortgaged increases or decreases over time?
The mortgage is in place for whatever term is on the loan, 15 years, 20 years, 30 years. The principal balance will be hopefully constantly declining. So the value of the house, if it's increasing, then the homeowner has more equity. That's the difference between the value and the loan principal amount. If the value decreases, then you get into that area where the customer is upside down. We heard that term a lot when the market crashed, that people were upside down in the mortgages, which means that they owe more than they could sell the home for at the moment. I don't anticipate that in today's market because we are still getting appreciation, although I think it's going to start decreasing in the amount of appreciation, but it's still going to appreciate. So I don't think we're going to see people upside down, but we will see people who still are building equity, maybe just not as rapidly as the moment.
That makes sense. It's been a really interesting year, and
Yes, it has.
fasten your seatbelt, roller coaster ride for sure.
Definitely.
We have a separate vlog dedicated to loan types specifically, but as we're heading into the last half of 2022 and early 2023, what kinds of loan types are you finding apply to people most right now?
A little bit of everything. There's the regular conventional conforming types. There are the jumbo loans. And as prices keep rising, we're finding more are going to the jumbo loans, which are the larger loans, or the unique loans, if they need an interest-only product or something like that. We also find several people are more suited for the FHA loan. That's geared towards first-time home buyers primarily, but you don't have to be a first-time home buyer. But it does allow for a little bit lower credit score. It's a little more liberal in its approval terms, so sometimes it's the perfect fit for somebody. And it definitely helps them get started. There's USDA loans, there's VA loans if someone is a veteran. So it depends on the customer, how much down payment they've got available, what kind of credit score they have, what their goals are. If they're only looking for a short-term loan, they might want to look at one of the ARMs. If they're looking for a long-term loan, we're going to look at some different parameters.
Thank you so much for making Mortgage Talk a fun thing to do, Lisa. I always love chatting with you. You're a wealth of knowledge, and it's been a lot of fun. Thank you for putting our first vlog together. If you're interested in more Mortgage Talk with Lisa, she's amazing. She's an expert. Please look at the contact information below and waste no time getting in touch with her. She's awesome. Thank you so much, Lisa.
Thank you, Kim.